Today, we're interviewing CEO of Gold Royalty Corp, David Garofalo. Good to have you today. Gold Royalty Corp has over 240 royalties. David, can you tell us a little bit more about this company?
Sure. Actually, it's a fairly new company in the royalty space. We IPO'd in New York about 3 years ago, March of 2021. And we started with 18 royalties on a number of development stage assets within the Americas, and then rapidly grew through consolidation. We merged with three companies over the course of 2021. And we also acquired royalties through third-party royalty acquisition, project financings, and we generate our own royalties organically. And we grew that royalty portfolio, which was a modest 18 royalties in the IPO, to over 240 royalties today. And we have the highest growth rate in revenue in the entire royalty space, 60% compounding annual growth in revenue right through the end of this decade.
Right. So you're a pioneer in the royalty industry. You're doing really good right now. Can you explain it a little bit more, like why someone would buy a mining royalty as opposed to, let's say, a mining exploration company? Why would you buy that stock? What's the advantage of that?
Yeah, look, if you're a bull on the gold price, but you're concerned about what inflation is going to do to the underlying operating and capital costs of an operator, you want to buy a royalty company, because what a royalty company provides you is top line exposure. We get a percentage of the revenue from the mine, insulating our shareholders from the operating and capital cost inflation. We also get exploration upside, because as our operating partners drill out their deposits and grow them geologically, we get that upside reflected in our royalty coverage as well. And so it's the best of all worlds. It's optimum leverage to the gold price, leverage to exploration, but without having to pay for it. So we have over 240 royalties. They're completely bought and paid for. We don't have any capital calls. All we do is wait to harvest the returns on those investments.
Right. David, you recently announced the acquisition of a Quebec portfolio of royalties. Do you want to expand more on this deal and how it went down?
So we acquired it from an arm of the Quebec government, SOQUEM. SOQUEM is focused on investing in grassroots exploration within Quebec. And quite often, as part of the consideration for their investments, they get royalties back in return on these properties. They had accumulated more than couple of dozen royalties over many years of investment, had no plan in which to crystallize value. We approached them. I've been operating in Quebec myself for over 30 years, having built mines with Agnico Eagle and with Goldcorp as well. And so I had a pre-existing relationship and asked them whether they would consider selling their royalty package to us in exchange for a $600,000 investment in Gold Royalty. They took stock back in return. So we picked up 22 royalties with some of the most prolific districts in Quebec, with some of the more senior operators in Quebec as well, and in a very cost-effective basis. And in doing so, attracted a strategic shareholder in Gold Royalty Corp and SOQUEM.
Is there anything else you'd like to add before we end this interview? Any milestones that are coming up, something to look forward to for shareholders?
Well, this is an auspicious year for us. So as I said, we only started 3 years ago. We started with 18 non-cash flowing royalties. Now have 245 royalties. 5 of them are cash flowing. We have 14 in construction. Many of them are coming into production this year. So we're going to see our revenue double this year. And as I said earlier on, we're seeing our revenue grow as 60% compounded annual growth rate right through the end of the decade as some of our more mature assets ramp up through expansions and through new greenfield developments as well. So this is our first year of free cash flow, 3 years after our founding. And that's remarkable in any startup business, but in particular in the royalty business.
Amazing. Well, looking forward to following the story. We're glad to have you.
Thanks for having me on.
Thanks.